What do sophisticated investors typically do when markets fail?
Just look at like what Warren Buffett's doing right now. Why is he selling off all of his stocks?
Why does trust and transparency matter even more during downturns?
Well, that's a loaded question. It depends on numerous factors.
What is your intention with this? If you're just going to buy it and hold it forever, like what is the plan?
There's still people that are flooding into the stock market. For what purpose? Don't invest into it just because some YouTuber told you that.
We're building massive businesses. We're obviously this country largest transfers of wealth. Baby boomers just coming of age. If you buy a business and you have
Welcome back to the KB podcast. My name's Kylie Brown. I have two of my colleagues on here, Daniel Patrick and Andrew Clements. Good evening, guys. How you doing today?
I'm doing good. It's not the evening though. It's the morning.
It is kind of morning. Depends where you're at.
Yep. I mean, yeah, if you're
Somewhere, maybe.
yeah.
Where's Andrew at? Are you still up in Connecticut? So what is it, 11:30-ish your time?
Still not evening. I mean, if you're in Eastern Europe, it's evening, I think.
No worries, guys. Well, today we're going to be going over a great topic. I think you guys are very knowledgeable on it, as am I. But what sophisticated investors do in a down market? I think it's not saying what's happening right now, but a lot of investors are worried about this. We get this question all the time. So it's an interesting subject. So what do you guys got?
Yeah, I'll jump right in. I mean, what do you think about that question that you just asked? What do sophisticated investors typically do when markets fail? Like how do you react? How do you make the best of that kind of situation? How do you really plan for it in advance?
Well, start out with how do you react? Because I'm in a few different businesses. So I'm in, Blue Onyx, which is horizontal development, KB Capstone Vertical, and then RPM, which is property management. And then I also do a lot of outside investments where, it's like crypto and stuff like that. So how do you manage it? Like first off, if you purchased right in any of those, there's not really much for you to worry about. I normally, like if you're talking about the crypto market, we'll jump into that in a minute, but I purchased at the right prices. So that doesn't stress me, even though I think Daniel was just talking about that a minute ago. That dropped 60%. But what we do, let's start out with, I think the better bet would be Blue Onyx. Blue Onyx is a horizontal construction company. And what is our main focus we do? We sell to, some of the national home builders. So what we do in place, like when the market fails, and you guys got to remember, I got in the market when it was failing. So that's how I started, is 2008. So when it was failing, I seen a lot of things that I shouldn't do and things that I should do. But on the should do's, we start increasing like even our home builder deposits. So we're in a market where we feel it's safe, especially here in Missouri. We'd only get a 5 or 10% deposit. If we know the market's on the downfall, even though the market doesn't change much here, we're going to start increasing those deposits, which are non-refundable. So we'll be aiming for, 15, 20, 25% deposits on the land. So it secures a vast majority of that money right up front. And all of that goes into an escrow deposit. So that's one of the key things we do with Blue Onyx to try to eliminate those risks.
I think when I hear the question, like what do sophisticated investors do during a down market? Like I feel like they find opportunity. Like we're talking about, it's like, well, if you got on the right price, you never had anything to worry about to begin with. But yeah, but also they're waiting for a down market. They're, shaking in their seat, waiting for the down market, because for a lot of people, that's the opportunity. And I think a lot of less sophisticated people associate a down market as this huge negative.
No, you're so right. And honestly, and sorry to interrupt you on there, but like I love down markets. I made the most amount of money in the down market. You don't get me wrong, you make good money in the up markets, but you could easily make, double, triple that in a down market. I mean, just look at like what Warren Buffett's doing right now. Why is he selling off all of his stocks? And maybe people don't know this, but he's selling off all of his stocks. He has I forgot what the number is, but it's multi-billions, 400 billion or whatever the number is, in cash right now. There's a reason for that, because he knows in a down market, that's where you could buy it for pennies on the dollar. So like what's going on with the crypto market, which sorry to jump back and forth.
That's fine.
But people think that I'm worried about the crypto market. No, this is excellent. I love that the crypto markets fell 60, 70%, because that gives me a chance to buy back in at a lower dollar amount, which, something like XRP, I bought in when it was 17 cents. It's still sitting at what, $1.30, $1.50? I have no idea actually, but it's in the dollar range, It doesn't really stress me because overall I'm still way ahead. But it's because I bought it, at the right time. And right now it's giving me one more opportunity before I think it starts really rocking off and, then never drops again below $5. So once you're there, then you're in a different, ball game, and you'll never have that, huge raise from 17 cents to $5 again.
What do you think really separates people from, like, who survive downturns to, those who, like, disappear, right? Like, what kinda
Well,
different.
most time that's people that just panic. They don't have a end game plan. So whenever you see these markets or these markets changing, they're not making the changes. Like right now, there's a ton of people. Look at the stock market. What's going on with the stock market as we speak? Is it going up, down? What? Do you guys pay attention to the stock market?
Yeah, I mean, it's
No.
kind of it's kind of all over. Yeah, it's just all over the place currently. I wouldn't say it's up or down. It's just kind of all over the place.
Yeah, but there's still people that are flooding into the stock market. For
Sure.
what
Yeah.
purpose? All the big investors, the retail that are big investors, but all the commercial and everything else, they're getting out of the stock market, while all of the small regional retailers, sorry, are still jumping in. They're putting all their money in, all their chips in, and it's just uneducated people at that point making, I would say, more rational, like emotional decisions versus something that's an educated decision. You got to watch what the rich people do. It's the same thing with what I did in real estate. I didn't go out there and just try to do it all on my own. I found the best people in that industry to follow. So same with investments. You want to follow what the smart people are doing, and they don't always get it right. So you have to learn your own ways of doing things. But that's a great start.
Yeah. And I think I hear a lot about like when I hear people say like, "Oh, I lost this during '07 and '08," which is, wasn't a great time for a lot of people. But when I hear them say that, I'm just like, well, it's because you realized the loss. Like you made sure that you lost in '07 and '08. Like, I remember I was talking to my granddad, he died a couple years ago, but, like, I called him, we talked all the time. He would always send me articles from the Wall Street Journal, and, like, he was always just sending me information and calling me, and just he was also a whiz on technology. He was like, the guy died at 92, and, like, he knew how to use an iPhone better than anybody. Like, love the guy. But when he talked about '07 and '08, he's like, "I made money." He's like, that was a great time." Like,
Well, I know, but Dana, go back to what really happened. So what happened in, '03, '04, '05, '06? What were people doing? Why did they think that was the prime time? And why did they end up hating '07, '08, '09, 2010?
are you talking about, what dude, I was in high school. I don't even know. I wasn't even in the markets then.
Oh, wait, let's see. Yeah, you might have been. No, you're graduated by '08. What year did you graduate?
'07. I got my driver's license in '04, '05, I think.
Okay. So you didn't experience that market as much. I'm only a couple years older than you, but people were, not only financing, they were refinancing, and they were pulling out every dime they could out of these properties. That's just not it's never a good investment method. Never. When has that ever been a great investment method to pull something out that just keeps going up, 20% year over year or more? Like, yeah, if you're going to pull it out, sell it off, it has to eventually fall. It
House of
has to.
cards.
Yeah. What would you say, Andrew? House of cards?
Yeah, it becomes a house of cards for sure.
Absolutely. Like, that market is so volatile. If you know you can get in and out, fine. But where you're maintaining and you're renting out, like I could just give you numerous example after example, but some of the people I worked with on short sales, they had these properties that, one of them wasn't even worth 600,000. I would say it's worth 350 back in the day. He had it financed to over $600,000. But because you could get anything financed for pretty much any amount, it didn't matter what kind of money you made. It was documented loans. Like it was just absolutely insane. So I'm not going to really jump into that, but that's just one method they utilized, and people would just go off of emotions. Well, okay, fine. If you're going to pull that much money out of it, sell that house off so that is no longer a liability. You finance it out for 600,000. You pulled out $200,000. Cool, move on. But they didn't do that. They kept it because they thought it was just going to keep going up forever. Nothing goes up forever. Nothing. There has to be a downturn. But when that downturn comes, if you set yourself up properly, that's when you're going to make a lot of money.
So I have a question because I think that, like, hedging your bets is a big piece of any kind of investment strategy, obviously. And I think obviously we're over here kind of selling our brand and our investment. So, like, if somebody were to come in, let's say they brought, 500 grand in, they were getting 90,000 a year in distributions, right? How would you take those 90,000 in distributions and reinvest them? Or kind of use the proceeds in which, we're generating for people to help kind of create a contingency plan or something like that.
Well, that's a loaded question. So it depends on numerous factors. So first off, how old you are, where you're planning on investing, what are you investing into. So for me personally, I joke around with you guys all the time that I'm 18 years old, which, I feel like, and honestly, like mentally and everything else, it's, a great feeling. But realistically, I'm 42. So I'm at an age where I still feel like I could risk a lot. So I don't mind going into riskier investments. That doesn't mean I put 100% into crypto. That doesn't mean I put 100% into real estate. But if you're making $90,000 additionally, and you get your core investments into real estate or investments like ours, obviously I'm prejudiced a little bit on that because I feel like our investments are super solid. But let's say they have, 90% of it into real estate. I think they should be diversified because the crypto market right now is just primed to invest into. It went down 60%. Most people get scared at that point. What is the saying? When people are scared, you jump in. And when people are jumping in, you start
The
backing
greedy
out.
and fear-filled and greedy,
Yep,
or whatever.
exactly. That's the better terminology. Absolutely. No, that's spot on, and that's the way it really works, and that's just because you're dealing with people that I'm not gonna refer it over, but I am married, I'm not gonna refer it over to women, but women are a little more emotional, so the way they respond versus men respond logically, and not saying we're any better, we're definitely not any better, but women respond more emotionally. And that's how most investors are. They respond emotionally. And there's nothing wrong with that because, emotions are great, but you have to go more to a logic response whenever you're dealing with investments and how you're going to grow your family's wealth. So it depends what you want to be in. I mean, I'm not sure where you guys fit, but I love those certain things. I love building companies. I love the horizontal and vertical aspects of, construction and development. And I love crypto. So those are my few things that I really focus in on. Not saying there's not many other options out there, but those are my few things that I enjoy and I know.
Yeah, 100%. And I do think, well, at least for a lot of the people probably watching this, probably looking for that passive, reliable, safe income. But like, there are levers like ours that you can basically generate that income and then, you know, have a portion on kind of sitting on the sidelines, waiting to be opportunistic with it. A lot of people obviously kind of dollar cost average in and continue to invest as we're talking about the 07, 08, realized losses occur when you sell, right? You held all the way through that 07, 08, number, even if you bought in, 05, 06, 20 years later, you're still way up, tenfold, right? So it's about, kind of the long game and holding on.
Well,
And
that's the great part. You don't have to know every little, thing with investments. You have to know a little bit about, certain ones. So like most people when they think of crypto, what do they think of? What's the first thing that pops in your mind when I say crypto?
Bitcoin.
Bitcoin. Okay, so Bitcoin, while I think it's a super solid, product, doesn't have a lot of use. They call it digital gold. But what you really want to look at is stuff that is actually gold. So what's backed by gold? Like there's different cryptos you can invest into that's 100% backed by gold, like PaxG or some of those other ones. And you could put them into different pools and earn 20% while your PaxG is going up in value because gold's going up in value. You can be earning 20% every year. Now, would I put a ton of money into that? Maybe not. But I don't mind putting, six figures into it personally because I know PaxG, I know what it's worth because it's backed by gold. And if I can earn 20% on average off of it, that's an excellent return. That's closer to what we're doing in, our own Blue Onyx and, KB Capstone, all that other stuff. That's about what we're paying out. But you want to be diversified. You don't want to just have it all sitting in crypto. Because what if, gold drops back down to $1,000? You're
Yeah.
making 20% a year, but right now it's at what, 5,000? Now, what's the likeliness of that? Very slim. So it's an educated decision, investment as well. So
Do you think most people should try and time them? I feel like most people shouldn't be trying to time the market, like because when most people do that, statistically, you're not gonna lose. It's exciting to try and time the market. If
So
you,
when you say exciting time in the market, explain that because I tell you my personal opinion,
yeah,
it's stressful. So
yeah, yeah. So I think there's what I'm not talking about is like just sitting on money and then wait. Well, let me just back up. So, in my opinion, when most people try and time the market, they end up not beating the S&P's average. Okay, because most people are emotional, stuff like that. But I mean, there's some times where it's just like it's really it seems pretty obvious. Like if that's your only strategy, I feel like you're going to lose. But if you dollar cost average, like I do, like I have a solo 401k.
mhm.
I put a portion of my check into that every month. I also max out my Roth. I don't dollar cost average my Roth. I just put that in first day of the new year. I'm just like boom, max it out. But as far as my traditional IRA, I do dollar cost averaging, but I also keep some money left to the side. And if I see something that's just like, whoa, dude, like it seems pretty obvious. Like if it's going to recover from this low ass point, then I'm going to make a bet. So I'll put it in. But if that was my only strategy, I would not be winning right now.
Okay. Okay. Now pick out one of those investments, just one of them. Give me one of them that you like.
Nvidia.
NVIDIA. Okay. So what's your end game with NVIDIA? Where are you looking for it to end before you pull out? Or is there a date or is there dollar amount? What is it?
No, I don't. I don't have. Now I am Nvidia. I'm in Nvidia. I think SPY is in Nvidia. I think the Vanguard, whatever. There's a few mutual funds that I'm in that I'm in Nvidia, but it's also diversified across a bunch of other stocks. Okay.
Okay, so but are you studying NVIDIA? Like, are you keeping up with it, and understand what they're developing and where their future's headed?
Yes, but your question was, do I have an end goal? And I was just going to touch on that because most like day traders, which I am not one, but anybody like there a lot of sophisticated traders, their first rule is just like have an intention. What is your intention with this? Are you just going to buy it and hold it forever? Like, what is the plan? Okay. So with that, I don't really have one. I think with AI, I think NVIDIA is going to be one of the major pioneers in developing AI and just making money from it. And so that's why I'm in it. Because even though I think it's overpriced, but I still think it's just going to continue to climb because of AI. That's just my opinion.
No, and I respect that. I'm just trying to see where your investment thesis really is at. So, like, for example, just so we go back to Bitcoin a little bit, I bought it most of my Bitcoin around $4,000 to $6,000. So, call it average $5,000. I knew I was going to pull out when it hit 100,000, which I did. I pulled out 100% of it out of Ethereum about the same time as I pulled out of Bitcoin. But I put it into other cryptos. So while I do believe 100% that Bitcoin is still going to go up to over $1 million, maybe even higher, maybe 5 or 10 million in the next 5-10 years, I also believe that this other cryptos are going to do much better on a percentage basis. Now, you can have some still left in Bitcoin and Ethereum and all that stuff, which I do, but I've found other investments that I just kind of lean towards a little bit more that I prefer. And I made my decision that that's where I was pulling out at, and that's where I left it. So, not saying you can't change because you always have to change. If you see something going on with, like, especially right now with all these crypto bills passing, you know, there's a lot of speculation there, but there's a lot going on behind, closed doors and, the US government and all the other governments with, the crypto markets and all the bills are passing to basically have some structure in place. So everything could be, they can monetize it and be able to visualize everything. So, they can see what's going on with all of us, which is good and bad, but they'll be able to see everything you do, every dollar you spend and every way you spend it. And, hopefully not be able to control it. That's the one thing we're trying to get rid of is, centralization. Everything needs to be decentralized. So as long as we keep that to an extent, I love it. If it goes more where it's all centralized, I'll probably start pulling out of different cryptos. And don't get me wrong, the biggest ones I like are going to be centralized. Like XRP is going to be centralized. So
That's the one I think that would be at most risk of being controlled. It actually has a use.
huge use. Yeah. So they'll probably be using it for, everything from, stocks, bonds, uh, real estate, everything you think of. So I'm sure they'll be using that a bunch.
Yep. And I do have some in XRP and Bitcoin. I'm not the only reason I'm in Bitcoin. I don't understand it, honestly.
Bitcoin?
Like I don't understand it. And I don't even want to get unless you insist on trying to explain it to me on this podcast. I don't want to be explained because all I know is that for whatever reason it climbs, it's proven, and I don't understand it. But I understand
First,
XRP.
and it's scarce. There's only 21 million of them. So
Yeah,
that's
that's it.
Thanks, Andrew. That's what I was just about ready to ask.
They're trading cards.
Well, that is the point with Bitcoin. It has to be mined, so there's a proof of work that has to be done there, and there's only 21 million of them, and a lot of them were lost in the initial wallets. So you got probably 5 million of them that might have already been lost forever.
landfills.
Yeah, landfills.
And probably only 15 million have been mined, so there's still 6 million to go. But
Yeah,
there's halving cycles and all that stuff. But there's only ever going to be 21 million. That's it.
yep. It's a scarcity. That's why XRP is not increasing because they're releasing a billion XRP a month, and there's 100 billion in supply of it. Now, when that starts to slow and they start utilizing it and burning much more of it, it's going to cause a lot of scarcity on that. So that day's coming, and there's a bunch of other ones. So we don't need to just talk about Bitcoin or XRP, but
Yeah.
back to what's secure and what's not secure investments and how we mitigate risk, during a down market. But I'm telling you, down markets is where people, as long as you take your time, like the one saying I always say to my kids, doesn't matter what we're doing, especially if we go ride dirt bikes, slow is smooth. And once you get smooth, smooth is fast. So make decisions slow, especially during a down market. You don't have to make them fast. Best decision makers in the world usually make things relatively quick, but that's after they have the information and they know what they're speaking about. So as long as you have enough knowledge to make a decision, yeah, make it quick. Make sure everything's running smooth, and then you'll start going into deeper.
I guess just to kind of transition here from like a more kind of mental framework standpoint, like what do sophisticated investors typically ask that inexperienced investors don't typically ask? Like, how are they underwriting deals or taking a look at things? What do you think about that?
Yeah, no, I mean, I think you guys probably get this question a lot. So when you guys speak to people, you've spoke to numerous sophisticated investors, and there's people that are very analytical, and there's people that are not. I am not very analytical, but I consider myself a pretty sophisticated investor. So I look at things differently than other people. But when you have an unsophisticated investor, what's the usual questions you guys get? It's usually the same basic stuff. I'm sure you guys got like a few basic things that they ask, and a lot of it might be about me. I don't really know, but what do you guys usually get?
Have you missed any payments? How long you've been in business? How are you able to pay 15 to 18%? Why don't you just go get it from the banks?
So, do you think a sophisticated investor would ask that last part?
Surprisingly, they do. I mean,
Yeah. I,
I'm shocked at how many times I get that, and I think they understand. A sophisticated investor understands that, but I still think it's a valid question, even for a sophisticated person, because some people they can't get money from the bank, and their only option is to go to private investors because a bank is not going to touch them with a 10-foot pole.
So, and a sophisticated investor will ask that if they don't have knowledge in, the horizontal or vertical development industry, because they don't understand how bank lending works. The banks never lend 100%. And I shouldn't say never. I have, relationships where I can get that, but the vast majority of times you will never get that.
Yeah, yeah,
But so the questions you're asking though, so an unsophisticated investor is asking some of the basic of the basics. When you get into sophisticated investors, they should be asking a lot more in-depth questions. And they're usually going to ask for like financial reports, stuff like that. What are your sales look like right now? What kind of money's coming in month by month or quarter by quarter? There's a lot of things that you want to look at. Okay, where are the expenses at? Not some of the basic stuff like how do you pay this kind of rate, which every pro forma we build, obviously it shows what we pay out without any issues. We know how that looks. That's some of the basic information. You want to get a little bit more in depth and find out, okay, depends what you're buying into. So if you're buying into crypto, researching who's backing that company, I think is important. Like if have they built other crypto companies, like I forgot his name, the guy that built Ethereum. Irrelevantly, even the people that built XRP, they have quite an extensive background. You want to research those people. You want to find a little bit more about them, but you also want to go digging deeper onto the financial side. What does it look like? What's going on with the market? Have they slowed down? Okay, the market right now, what does it look like we're going into? Are we going into World War III? What does it look like? That's what it looks like, but I don't believe that's going to happen. I believe, there's going to be some craziness happens, but I think everything's going to, not going to say just smooth over because there's going to be a lot of things that happen in the interim, but I think things are going to be good for the next few years for sure.
yep.
I guess I got another question here. Why does trust and transparency matter even more during downturns?
Well, I don't think there's any reason to invest in someone if you don't trust them. Like, I don't know. And I hate to give an analogy on it, but it's like a relationship. If you can't trust that person you're with, what's the purpose of spending the rest of your life with them? That's going to be a pretty miserable situation. Same with an investment. If you can't trust the people that you're working with, where you invested the money, trust is everything. Like now, will they always know us? Probably not, but do some research. Find out what kind of people we are. Now, nobody has a perfect record. Nobody. So, people that are throwing stones from a glass house, they can say whatever they want. That doesn't really bother me. But what have we done in the last few years? We're not perfect. And I think you said this earlier, or maybe it was on the webinar, but we've lost money. We've definitely lost money.
Yeah.
How do we do that? Well, that 2000, one of you guys were just talking about it. I think it was Daniel. COVID prices went through the roof. They were just crazy. And I knew I was right in the mix on one or two houses. And I still have one of them. I'm actually just finally got an offer on it. I'm probably losing $50,000 on this one house. It's just a few things that I bought. And, I'm not sure where we'll settle out at, but it is what it is. I made a ton of money off the rest of the houses I bought. But I knew I was coming right to the end of it, and I should have pulled out a little bit quicker. But even myself, I feel I'm a sophisticated investor. I waited a little bit too long, and can't even say that with this one house. It just had so many issues that were not found on the inspection reports. So stuff happens. You're going to run into those issues.
Yep.
And what was the second part of that, Andrew? You said trust and what?
Yeah, transparency. I mean, I'm kind of asking the question because I do think as a group we're incredibly transparent,
Yeah, absolutely.
and I think a lot of what we have to offer people is really kind of pulling the veil back and showing what we're doing, how we're doing it, and with our monthly investor updates, we're really willing to answer any kind of questions. So like
Well, I will say on the transparency side, and you guys know this for sure, pretty much anybody that's invested with us, even on the investor update call, I've had numerous people say that I'm over transparent, because I let everybody know everything that's going on. But I also believe that it's better to make statements of stuff versus them come back later and saying, hey, why didn't you tell us this? We thought it was X ABC, but it's really XYZ. So I'm very transparent on all of that. I'd rather people be in the know, and then they can make a decision whether they want to invest more with us or leave their money in for the 3 or 5 years, or if they want to take it and put it somewhere else. I don't believe that's a downfall personally. But
Yeah, I think you do a great job with it, and that's kind of the reason why I was asking the question because I do believe you are, ultra transparent on everything, and like I do think that that goes an incredibly long way because obviously as you're saying, right, there's going to be ups, there's going to be downs. The goal is to kind of obviously ride through the storm in every kind of way, shape, and possible, and just you want to have a great transparent partner throughout that process.
yeah, because there's going to be downs, guys. Like any investment, it's going to have its downs. But that's when you got to decide where. Like, give you an example for what was Bitcoin at? Was the high was at 130 ish,
On one
126?
point, yeah, ish.
Okay, so let's say you invested at, let's call it $30,000, right? So you're like up, 400%, and then it went down to like 90,000. Do you pull out or do you leave it in?
I mean, I'm leaving it in all day, but be different strokes for different folks for sure.
Okay, so but you're up still at that point, give or take 300% or 280, whatever the number is.
Yeah.
You're still up 300% at that point. But let's say it goes down in there, $30,000, $40,000.
Which it did. It went to 60.
I know, but these are
And now
decisions.
it's back at 80 now. So, once again, I think it goes to me what your time horizon is and what you're looking to get out of it, right?
Absolutely, absolutely. So, but as long as you're not emotional about that, because like when the market crashed, even our IT guy was asking me the other day, he thought I was worried about the market. No, I love that the market's crashed. I love that the crypto market's crashed. I don't want anybody to, like do anything harmful to themselves. Like if you invested into Bitcoin at 126,000, you have to know what it's built on, where it's headed. Otherwise, it's going to be hard to see it when it drops down to 60,000 or whatever it dropped down to, 50,000, whatever it was. It's going to be hard to see your $100,000 you put into it drop to $50,000. But if you could wait the long term and you're not needing that money at the moment, that 100,000 you invested most likely will turn into $1 million. It most likely will. So it's just knowing your time, like you said, Daniel, knowing your time horizons, knowing what you invested into. If you don't know what you're investing into, don't invest into it just because some YouTuber told you that XLM is going to $5. Okay, great, it might and it probably will, but what's that time frame look like? Is that by 2030? Who's stating that information? Go do some research on it and make sure you know some of the details. If you're going to invest your hard-earned money to sit there and work for you, you have to know what you're investing into, and you got to know where that project's headed, and you got to know the people that are handling that project. So, and you got to know its use case. There's different things you could take into that situation, and especially in a down market, crypto just went down. Great time to buy. I would have bought as much as I could. Honestly, I wasn't cash rich at the moment, so I didn't put a lot into it, but still, put a good chunk into it recently, and I expect that money to at least double, if not triple, and I'll pull it right back out. So that's kind of my philosophy of that money, but I'll leave all the rest of it, the profits in. So I'll just pull out my initial cash that I put into it, and I'll let the rest float until whatever year or whatever dollar amount I've already got written down where I think it's going to end at.
Awesome, man.
Well, I think we're at the half hour mark here.
I got to jump, gentlemen.
You got a call, jump on. So, well, guys, appreciate you guys jumping on. I guess I'll wrap it up. Do you guys have any other questions or any thoughts before we wrap up?
I'm good.
Good. Awesome. No, well, look forward to speaking with you guys next week. Thank you all for joining. If I don't speak with you guys soon, have a blessed weekend, and I'll chat with you. Bye.